proceed. Let's proceed. So I'll be also mentoring you on how to trade a crypto. I'll be
Now, what's the difference?
actually, let me leave this group and these groups. Okay, let's go back to the difference. I have a video here. Crypto seems to be more complicated to people. I don't know why, but it's not an easy buy and sell like how you normally do when you're trading these forex pairs. Not an easy thing. Yeah, the platforms that we use to trade crypto is not the same. They're not user friendly, like how MT4 and MT5 are
Yes.
user friendly.
So they're quite complex.
Yeah, something like that. So on that entry for US30, this is the model I employed. This is the model I employed. There's a breaker. You need to have a high, a low, a higher high. And then you have
I can't see your screen.
sorry. Um, this one. I'm sharing this one. Can you see my screen?
Yes. Yes.
Yes, I'm saying um I'm talking about this model, right? The breaker. You want to see liquidity being engaged at a specific time, and then you want to see a model. This is easy, man. You just highlight your times like this. You highlight the low and the high from here. Yazi, this is just yo, this is easy, man. This is like I'm simplifying things to you right now. If you were to see how other people trade, you would be amazed, bro. The lines they draw every day, it's too much, man. And they don't make money. They don't know that this is an algorithm. This is like some you see on this price leg, nothing is important here. This is more that nothing is more important than this high and this low. I know it's a New York PM session. Buy side here, there are buy stops here, there are sell stops here. When this thing comes here, I know it's gonna come up and then go inside and then give me a structure to take it down to this here. Even when it gets here, what did it do? Gave me a structure to take it back up. So I sold this thing and I bought this thing here. Simple. It's gonna go, and if the bias is bullish, like how the bias for this one was bullish, I'm gonna go into details on how to determine the bias. But we use the same model on like the same model that I use on this 5 minute time frame. And okay, just write this down for me. We use these time frames for entries. Just write time frames for entries. Just write down time frames for entries because we are just talking about entries right now.
Okay.
Time frames for entries, you use M5 and lower. M5 is like 5 minute time frame. And then
Mm-hmm.
M5, you can use M5, M3, and M1. You can
Okay.
go as low as 30 seconds, but we are not paying for trading view, so we don't have access to say the seconds chart unless you're paying.
Okay.
I'll start paying for trading view soon because I'm learning. I've just learned something about those 30-second charts. I want to execute my trades there. But the structure that's forming on 5 minutes, as you can see here, if you buy at the low here, and then you leave this thing to run for 4 hours, when you go to 4 hours, let's go to 1 hour first. Let's see. When you go to 1 hour, you see the buy entry is where? At the low of this candle. You understand? So we're buying low. And then this thing went up and up because you see there is a buy entry. This is from M5, right? So we
Yes.
bought the low of this candle. Yeah. We bought the low and then it went up. We want to buy the low and sell the high. Same thing here. When we sold here, I sold the high of this candle and then it went down. I sold the high of this candle. And then from there,
Yes.
it's lower. But I'm not gonna be able to see exactly what happened in terms of structure if I'm looking at 1 hour. I'm trying to emphasize the point of entering at lower time frames because the structure is what we are looking for and it's more visible on smaller time frames. You understand? The same 1 hour can. This took like how much? 3 hours so or 3 or 4 hours. So you have three. If you go on 1 hour, you have 3 or 4 candles going from here to here. But you can't see what was happening there. Like you can't see a detailed price action. So that's why we go to a smaller time frame to see a more clear and detailed price action. To see structure more clearly, you can go to M3. The candles will be more, right? So the structure will be even more clear. That's why if you go to M3, you understand why I put this IOFED where I put it. This is institutional order flow entry drill. When an order block, I mean, when a candle doesn't enter the fair value gap with so much pips, it can just equal this or just go in with a tiny bit. That's institutional order flow entry drill. It means price is more willing to go lower if it's a sell side imbalance and buy side inefficiency. It won't efficiently deliver price to the buy side because institutional order flow is bearish and it is strongly bearish. So you want to engage with price if it gives you like a second entry. Maybe if it gives like you can see here, there's a fair value gap here, which we could have used as an entry after this one has failed because we know that price has no willingness to go higher once we see this thing here. The candle opened here, it would have traded inside, but it didn't. So it left. But also all these things, we want to see such things happen at the right time after liquidity has been taken. So it's time and price. Time is more important. Even liquidity, you don't care. This liquidity is annotated because this is a specific liquidity at a specific time. It was a New York PM session high. So it's buy side liquidity time, PM session high time. It was patched during our kill zone, which is the London kill zone from 2 to 5. Okay, this thing, I think I extended this by mistake. It was supposed to be here at 5 days. And then from there, you wait for a model. We took buy side here, buy side liquidity, and then we didn't create a bearish market structure shift. We went up again, and then we took this buy side here again. And then from there, we dropped lower, creating a bearish market structure shift here because we're now taking out the intermediate low, the low of the high. This is the low of the high that took out buy side. Not any low, not just any low, okay? You take the low of the high that took out buy side liquidity. You want to see that being taken out with impulse. Look at this candle here. Do you see this? This is an impulse.
Yes.
This is the displacement candle. And then the inefficiency that is left in this candle. So you wait for this candle to finish and then the fair value gap is left. This is what we use to enter price. If it comes back here, we enter. Okay. This is a fair value gap entry. Yes, this is a fair value gap entry. this type of entry. No, not this one. Let's go back down. This is this type of entry. But you can see here that it didn't trade inside here. So it was strongly bearish. It couldn't even have the willingness to go inside here. So it went lower again, breaking these lows here. And then it created a new fair value gap here. And then price did what? It went back to it. You could have sold it there. If you missed this one, it went back down. I mean, it went lower again, and then it left another small fair value gap here. You could have also used this one, right?
Yeah.
Okay, and also you could use this order block CE as an entry. So you can catch it at the high here. So you sell high, and then you target this sell side liquidity, low hanging fruits, Asian low, or you can just go lower, take your partials here. At the low, you close partials, take partials, and then partials. Partials, by partials, I mean you take half of the trade. I'm going to teach you how to do that on your MT4. Let's say you started with a lot size 10. You
Yeah.
can close. Do you know what a lot size is?
No.
Volume in your trading forex. Don't worry, you get used to the terms. So I'm going to be having Zoom sessions. Right now, I'm just giving you a glimpse of what I do when I'm analyzing the chart. This is like,
Okay.
I know this is like Chinese now for you now, but there is no other way. You need to go, you need to be exposed to it. I'm exposing you to the real shape now. Okay. And this is what you're going to be doing every day. Just put those vertical lines, highlight your Asian session, look at what happens. Just watch for now. Don't place any trade, just watch and look. And if you can spot these things, you can go back to your charts. You don't need to wait for tomorrow's price because it's going to take some time for you to be able to catch this thing in real time. For now, I want you to just go back and back test, and you send inside the group there. You can just go to 1 hour, né? Go to 1 hour, highlight the highs and the lows on 1 hour, and look what happened on a smaller time frame, like 5 minutes after those highs were taken out. You will see. You can just do this here. Let me just show you. Okay, let's go to Euro. Maybe let's go to Euro. Okay, so you go to 1 hour. And then you put your times there. The first thing I want you to be able to do is to put the important times. Yeah? So you do it like this here. You open your session breaks so that you know, okay, this is the day. This day, or let's take this day, for example. Oh, you can take any day, man. You can take any day, but I want a trending day where prices are moving. Let's take this one here. This day here. That's it, finishes here. The first thing you want to do, this is how I do it. From 8, okay, okay, wait. I'm not just making this up, né? From 8 to 12, that's Asian session, right? From 8 to 12 midnight, that's Asian session, right? Hello, can you hear me? Hello?
I'm just trying to confirm. From 8 to 12, yes.
Yes, that's your Asian session, right? So you have the
Yes.
to show you something. And this most often than not, this is accumulation. So price will move sideways. As you can see, that's exactly what it did here. And the first movement outside this box, 80% of the time, it's manipulation. We don't trade this. So it's going to take out a set. Sorry about that.
No, that's fine.
Sorry about that. The signal is bad, man, for some reason. My signal is bad for some reason. It's disconnecting me. I don't know what's happening. I want to
Maybe
show
it's
you.
the peak time.
Yeah, it is a peak time. People are TikToking. I want to show you something here. We want to work. People are TikToking. Ish. I want to show you this thing here. So you have your Asian. This is your Asian session. This is what I do on. And then no, when I wake up in the morning, this is what I do. I want you to just look at what I'm doing. I want you to go back to this video and just do exactly as I did on this video. You will never go wrong. Issue. That's my is this Chinese or what session? Asian session. So, and then from here, you're just gonna put your vertical line at 2. Okay, wait, first, you just extend your midnight open price. So if the candle is down closed, meaning it's on your charts, it's gonna be green if it's bullish like this. On mine, it's blackish charcoal. And then if it's bearish, it's gonna be a red candle even on your charts. You remember I told you about the open, high, low, close. You know about that, right? I want you to
Yeah, that's
yes, I want you to extend the opening price here. So I'm gonna extend the low of this candle, not the low, but the opening price is just, and I'm just gonna extend it the entire day. I'm just gonna extend this thing here because I know that if I'm buying, I want to buy at below the opening price here, the midnight open, because price is always discount. It's a discount below this thing here, below this. And then above it's a premium. If I want to buy, the best buy is below here. So I'm gonna try my level best to get a buy that's below here. But I'm not gonna force things if the model is not printed. I'm gonna wait for a model. So I want to show you something of, I want to show you how I analyze the charts. And then this is what I do in the morning. Bear in mind, we right now, by this time, I don't know exactly what's gonna happen here. I'm just here. And then I put my lines here prior at 2 and then at 5. I just label this as my London open kill zone. So I'm just gonna have London open kill zone. You understand? So I'm just gonna say LK. This is I just type LKZ because I know exactly what I'm talking about. I don't need to explain. And I don't need to go in detail. I don't need to write this in detail. And then after that, I'm just gonna go to 7 to 9. 7 to 9 p.m. That's my New York, right? These are the times I'm talking about. 8:30 to 11, 7 to 10. Okay, this is Forex. This is for indices. This is Forex. So I'm using 7 to 9. Okay, you can extend it to 7 to 10. It's fine. Because I'm fully, so indices is, these are indices, né? So there's a slight change if you're talking about indices. This is indices, US 30 NASDAQ. This is for Forex, Euro USD, GBP USD, but the kill zones are the same, and you can use the same for indices, and because there's a slight change here. There's a slight change. There's just for New York Open, they open earlier, 30 minutes earlier than this. Actually, an hour and 1 hour, 30 minutes earlier than this. You just shift a little bit, but you can sometimes I use the same time for Forex as indices. The algorithm tends to, it will not print a model. If it prints a model at 7, I'm happy to take it. But I'm not there. Yeah. So it's 7 to 9. And then I just highlight that and I just put New York. New York open kill zone. So I'm just gonna go New York. I'm just gonna say New York kill zone. So I put NKZ. Then these are my sessions. This is where I'm gonna execute the trades. I want to see what price is doing here. Okay, the previous day, what do I have? I have New York PM session at the New York, where is New York PM session at 1:30 to 4 the previous day. I'm gonna highlight that as well. So this is the previous day. Now remember this, you look down here, this is Tuesday's price. And then if I go to what's happening here? Okay, wait. This is no longer Tuesday, most. Why is it given that? Okay. No man, what is this thing? Tuesday. What the fuck? Okay, maybe there was an event here or something. Okay. Wait, let me do this here. I want to process, right? Okay. Session breaks. I just put it darker. I don't understand what's happening. This is both Tuesday. What the fuck? Monday, Tuesday. Monday can't be this. Monday. I don't understand what's happening. I'm crossing over, but it keeps on saying Tuesday. Monday, Tuesday. What the fuck? Okay, I don't understand what's happening. Let's just highlight the PM session for this, yeah, for this. Yeah, New York PM session starts at 1:30 to 4:30. So I'm just gonna go and 1:30 and 4:30. What's happening with you? Can't have two Tuesdays. Okay, let me check. This is Tuesday, the 20th.
20th.
Monday, 19th. And this is Wednesday. Yeah. What was happening there? This is Tuesday. This is
Yes.
exactly how it should be.
You went too fast.
Oh, I went too fast. What the fuck is happening? Look, when I'm on 5 minutes, look at this thing here. It's saying Tuesday. And it's also saying Tuesday. Oh my goodness. Oh, fuck. Fuck. I understand why it's saying this, man. Look.
The times.
Yeah, look, I'm gonna explain what this is like 8 to 12. 12 is here. So it's gonna cross over here. I'm used to using South African time, man. If you're using South African time, as soon as you cross over, hey man, what's happening? Fuck. As soon as you cross over, it says Wednesday, Tuesday, and you see the transition. Tuesday, Wednesday, Tuesday, Wednesday. But once you use New York ends here. So you
Oh,
only
because of the time difference.
that's the time difference. Sorry about that. So the New York PM session starts at 1:30. So I'm just gonna put 1:30 here. 1:30, 1:30, 1:30. Yeah. And then I'm gonna put 4. Where is 4? 4 is somewhere here. I'm just gonna highlight the high and the low from there. So I want to go back to this picture here. Okay, not this picture. This picture here, the one that I sent just now. I mean, not just today. This picture here. Don't forget this. This is accumulation, manipulation, distribution. A, M.
MD.
Once you see accumulation, the first move outside of this, most likely it is manipulation, and it's targeting sell stops or buy stops, depending if you're moving lower or higher. If we're going low, these are sell stops. This is sell side liquidity. Targeting sell side, once you see a market structure, you don't hesitate to take it to the liquidity residing the opposite side. And look here, look what happened here. Generating liquidity, so we have buy stops and sell stops below here. What do we have here? We have New York PM session. We have New York PM session. Already, this accumulation is taking place above buy side here. So buy side has already been taken out. What's important here is this New York PM session, sell side. So it was okay, New York PM session, sell side. And then we have this New York PM session, sell side. That was taken out. This is manipulation. Manipulation. Anything below this low is manipulation, right? And then we manipulated, we took this thing out because this is accumulation. So I'm just going to put A here. A big A. And then I'm going to put manipulation here. And then you wait inside the kill zone here. Inside the kill zone here, do you get a market structure shift and displacement? And then what do you see? Let's go to 3 minutes and see the structure properly there. I want to show you something. This is what I use. This is what I do every day. This is what I do. You'll see on my charts, I'll always have this line extended because already I know that we are running out of time again. We're gonna have one last session, one or two last session, depending. I think we're gonna have sessions until 2 o'clock, eh?
Yes, that's 1 more hour.
Just go back to these videos on your spare time, and then I want you to be active on the group there. You send me exactly what you've learned. Are you able to see buy side liquidity, sell side liquidity? Are you able to annotate? But first, please annotate these times for me. These are the most special times. London kill zone, New York kill zone. And then you're gonna go on and on for silver bullet. You just go from 10 to 11. That's a silver bullet entry.
Okay.
Just go to, you write silver bullet there. Silver bullet. So if you saw me taking a trade at this time, you must know that that's a silver bullet. Understand? And silver bullet is like a fair value gap entry like this here for continuation. Silver bullet entry. That's the entry. You see the fair value gap, that price would go back inside, go back into during this time window. There's always a fair value gap. That's a sweet spot. That's an entry to continue the ride up. Okay.
Okay.
But you get used to these things, bro. You get used to these things. And you buy the low. If you took this trade already, you are leveraging there. You're entering more positions to take it higher. If the price is also good. I caught this trade actually. I made money here. I made money, but I think I took profit here. When it came back, I was already out. Okay, I want to show you something here. When it manipulated lower, and it came back lower, this thing came, this is what happened. I want to see if we saw the model here. After sell side, after liquidity has been taken, it's a specific time. This is a kill zone, right?
Yes.
Yeah. This thing didn't give us a model inside the kill zone. So if you are outside this time window, let me check. No, this is not the one. This is the one, 225. 225, yes. This is the kill zone for us. This is the kill zone for us. Wait, let me check here. Oh yeah, yeah, this is the kill zone for us. It's up there. This is the kill zone for us. So once you see what happened inside this price, bear in mind you are below midnight open. This is midnight open. So this is a good buy zone for us because price is a discount already. You are trading below midnight open. So it came down, we took sell side, and then did we break this high? Yes, we did here. This is the intermediate high that we want to see price break before we engage with it. So this is market structure shift because this is the high of the low that took out sell side, right? This is the high of the low that took out sell side. So we believe that price will never, now if we are bullish, it won't go below this low. But for us to engage with price, you remember I told you about OTE, right?
Yes.
If I take my Fibonacci, once I see this candle, and this candle goes in here, I see that price is now coming. Sorry, man, I'm actually showing you the wrong. I'm showing you the wrong price leg. This high, okay. Let me show you something. I want you to be clear. This thing here, I'm just gonna highlight it. So what do we have here? We have low, and then a higher high. Okay, let me start there. Let me start here. We have a low, we have a high, we have a lower low, and then you have a higher high. You remember me telling you about this, right? And then once you see price go lower like this here, once it signals that, okay, now I'm going lower inside this price leg, what do you look for in here? You look for an inefficiency that, because sell side has been, liquidity has been purged at a specific time, right?
Also, so then that would, okay, because earlier on you said that would be the sell side liquidity.
Sorry?
If I'm not mistaken, you said I would use the what? The fib tracements to measure.
Exactly. Yes, exactly. That's the next step now. That's the next step. Especially if you can't see an imbalance here that you see, okay, price is gonna fill that imbalance before expanding higher. You want to measure an imbalance here. You want to measure using a Fibonacci. So by OTE, okay, here, you measure the high and the low. You want to enter a trade below here, right?
Yes.
What do you have here? In a small imbalance here. There's a fair value gap here in this price leg that you can extend. You can use this as a discount fair value gap, buy side inefficiency, buy side inefficiency, sell side, buy side imbalance, sell side inefficiency. Buy side imbalance. A discount. This is a discount because you are below midnight open here. Okay. But you also have OTE. If you go to click your Fibonacci and then you go to your settings and then you go to your levels. These are my OTE levels. I told you that it's 0.9 and 0.62, right?
You said 0.62 and 0.79.
Can you see my screen here?
Yes.
I just activated 0.79 and 0.72. Those Fibonacci levels, they give me an entry. Okay, so I'm just gonna redo it. I'll go from bottom here to up there. I'm just gonna extend them like this. You see here, this is the high and the low. And then where is my 50 and 60? This is my 62. Not so clear, but you can see, look at the green line and the red line.
Yes, yes.
My entry for this price leg here is there. Is there. What did price do? You look at these candles here, they closed inside this range. Forget about the wicks. Wicks do the damage. The candle bodies tell a story. Okay. This is the sweet spot for this price leg. And if you have an imbalance inside this price leg, even better. Okay. Because you had that fair value gap, but it's small, the price, the DSK fair value gap. Price when traded below and the candle body is closed below it. So this was the sweet spot. This is what held price here. That's an entry. We call this one an OTE, optimal trade entry. You can just put a hyphen next to OTE and just say optimal trade entry. You can use this thing as an entry model. It's the same thing as a 2022 model because the 2022 model is the one that uses the fair value gap. But here you'll have like a clear level as to where you want to engage with price. And then you once you buy here, you put your stop loss just below the low here, and then you target buy side liquidity. And if you look here, buy side liquidity in terms of highs and the lows. So let's say you entered here. Let's go back to M15 and see what price did. Okay, let's say you entered somewhere, the discount fair value gap. Let's go to 5 minutes so that price will be. We now have exactly less than a minute before this thing ends. This is sad. We're gonna have another Zoom session.